Hi, and welcome to the Midday Market update for this Tuesday, February 2nd, 2020. My name's Kevin Hill, here as always with Michael Vincent.
Hey, how you doing, man? On this Groundhog's Day.
I am doing good.
Did you wake up and check the Weather Channel right away to see if
I did. I checked
if Punxsutawney Phil saw his shadow?
He did see a shadow.
He did.
That means 6 more weeks of winter.
It really does.
It really does.
And if you want to tell us how you feel about that or have any questions or comments during the show, it is live and interactive. So FreightWaves LinkedIn and Facebook channels, right?
It is, yes.
We'll check those out and try and get your questions answered and get to your comments as we go through the day today. We got some back in studio today, right? Which is kind of cool.
It is cool.
So we got the whole gang back together, don't we?
The band is back in session today. So yeah, we have Andrew Cox on the news, Zach Strickland, our Director of Freight Market Intelligence here, talking about the freight markets today, and our lead economist, Anthony Smith. And then we have LaRocco talking about exports, U.S. exports, and the U.S. U.S. carriers, maritime carriers on that. And then Spencer Tenney from the Tenney Group talking about M&A and the outlook for mergers and acquisitions in trucking and logistics. In
one of my favorite subjects. It's going to be interesting to go through that and see what's going on in that area.
Valuations are always nice.
Just something happened yesterday, right, or this morning, or
yesterday.
Yeah.
TFI is on a buying spree. So we'll definitely talk about TFI and UPS Freight and the recent acquisition that they did yesterday. But as always, let's start off with the news, the headlines on FreightWaves.com. If you're not a subscriber to the newsletter, you can subscribe at FreightWaves.com. Just go on there and get all the top headlines every single day delivered at noon from the world of freight and logistics.
Right on.
But yeah, so the ocean market is hot and it keeps on heating up. And that's our lead article today with Andrew Cox.
Apologies for that. I didn't have my mic turned on, but I was going to say that the ocean industry keeps extending their expectations for this peak season. So they believe that it would peak around Golden Week in October. That didn't come to fruition. Then they kind of pushed their expectation back towards the end of the year. It's blown right through that as well. Now they're saying that it may be, they pointed towards Lunar New Year, the Chinese celebration of New Year, as maybe the peak. That doesn't seem that it's going to happen either. Spot rates remain absolutely stratospheric. The container port congestion in California continues to break records. There's now 40 container ships in the San Pedro Bay as of yesterday. That's a fresh new all-time high. Liners are now canceling voyages this month, not due to a lack of demand, but because of the congestion at the port. This is pushing even more freight and more volume into the months after the Chinese New Year. So it now appears that spot rates will remain strong all the way through the second quarter. They may ebb from their current highs now, but they most certainly won't crash. This is exactly the scenario that U.S. importers feared. So they will now have to negotiate their annual contracts, many of which expire on May 1st in the midst of a spot rate boom. According to Zanetta, ocean contract rates rose about 6% from December to January. That's one of the largest one-month increases in the company's history. Industry experts are urging shippers to go ahead and tender and begin renegotiating those contracts as soon as possible. Zanetta said that those that have pushed forward with their contract negotiations are seeing an increase of about 30 to 50% in rate increases. And that may sound astronomical, but it pales in comparison to the spot rate inflation that we've seen over the past year. Freightos Daily Baltic Index from China to the West Coast and from China to the East Coast have each doubled over the past year. Contract rates haven't quite exploded to the same degree as spot rates, but they have risen quite rapidly in recent weeks. Most contract rates took a nosedive back in 2016 when the market crashed. The carriers have tried desperately to bring those contract rates up ever since, but have failed to do so. It seems 2021 may be finally the year that they're able to push those rates up significantly. Sea Intelligence Consulting CEO Lars Jensen said that contract rates are raised back towards normal pre-16, pre-market crash levels. You're looking at about a 70% increase in Trans-Pacific lanes and a 50% increase from Asia to Europe. So there's going to be quite a bit of tension between carriers and shippers in their contract negotiations in 2021. Carriers, of course, want to maximize their own profitability, which is perfectly fair in any market, but that always comes at a cost. This will come at the cost of more tension in their relationships with their customers. Fellas?
Yeah. Contract negotiations are always tense.
They are always tense, so they're going to be really tense this year, aren't they?
They are, but we say the rates are stratospheric, and that's probably a good point since 2015. They're up there, right? But if I'm reading this correct, Andrew, and hopefully I just want to clarify, or for my own, because I'm trying to, how should I react to this? Are rates going to just go incredibly high and we've never seen this before? Or is this a correction from a downward spiral that happened 4 years ago? Zanetta says, those that are pushing forward with long-term contract rates see an increase of 30 to 50% rates, right? But to get to pre-2016, right, Sea Intelligence says you're looking at an increase of 70% in the Pacific and 50% increase in Asia or Europe. So is this really just a correction of rates that we've had back to 2015 levels?
Well, Zanetta is saying that the rates have been low for so long that carriers have been trying to push this forward and trying to get these rate increases. So it does seem that, yes, they're trying to recover those rates back to the pre-crash levels. So it's going to take some time here for things to recover back to pre-16 levels. We'll see then where they go after that. Much like a stock that has that has a peak, has a long time of depletion, and then comes back up towards time, you often see a rise further of that once there's no resistance up of that level. So you may see things go even higher from here, but they're certainly trying to push back towards those pre-pandemic or pre-2016 crash levels.
Yeah, and that's something that we'll dig in deeper at the bottom of the hour with Lorianne LaRocco.
Oh, yeah, that's
some
true.
really good information on that. Let's turn to earnings and domestic freight and LTL with ArcBest. Andrew?
Yeah, so ArcBest beat consensus expectations by 5 cents, bringing in 97 cents per share in EPS in the fourth quarter. The asset-based segment of the company, which does include its LTL division, reported an 8% year-over-year increase in revenue, with a similar growth in tonnage, and revenue per hundredweight or yield moved just slightly higher. LTL tonnage was up double-digit percentages, with weight per shipment increasing 10%. Excluding fuel surcharges, yield was up in the low single-digit range for the LTL division. As a whole, the division posted a 93.7% adjusted operating ratio for the quarter. That's a 130 basis point improvement over last year. The company noted a strong housing market demand as a contributor to the improved demand and improved weights per shipment. The asset-light segment reported a 27% year-over-year increase in revenue with, again, another 130 basis point improvement in OR. They pointed towards a tight market for logistics equipment and carrier resources for the reason for the improvement. Overall, ArcBest executed well throughout the uncertainties of the period. The company also hosted their earnings call this morning at 9:30, so stay tuned to FreightWaves.com throughout the afternoon for updates on that.
It certainly looks like ArcBest is in line with other trucking, whether full truckload or LTL companies that have reported so far. Robust earnings and a good fourth quarter and good expectations for 2021, right, Andrew?
Yeah, I think that's true. It's interesting because if you remember when we first started this, we were talking about LTL carriers that are having a really tough time managing the change in the freight mix, right? And their earnings were very, very difficult. But now you see ArcBest doing quite well, and also hidden in there is something that is interesting, and our own Zach Strickland and I have lived this life before. Is you saw that their weight per shipment went up as their LTL tonnage went up, and that's a difficult thing to manage if you don't know what you're doing in pricing in LTL, right? If you're not looking for that type of thing, when truckload. The tender rejections in truckload becomes very tight in capacity. They start splitting that up and hitting you with these spot market volume moves that can destroy your revenue if you're not ready for that and know what you're doing as an LTL carrier.
You definitely can. So the CDC, we'll finish up here. The CDC has some new regulations on masks and public transport. How does that affect trucking and logistics, Andrew?
Yeah, the TSA on Monday issued a security directive to airport operators saying that it will enforce the order from the CDC that persons entering or on a transportation hub must wear a mask. President Joe Biden instructed agencies to require mask wearing for domestic and international travel to reduce the spread of the coronavirus, but the rules also apply to airports, seaports, and border crossings. So freight forwarders, cargo security companies, truck drivers, and even warehouse operators must also wear masks when they are on an airport or seaport property. Solo truck drivers operating over the road are exempt from the CDC mask requirement, but the Air Forwarders Association on Sunday advised its members to expect additional regulations related to the COVID-19 pandemic from OSHA in response to the president's January 21st executive order on protecting worker health and safety. Fellas.
You want to hear my reaction to that?
I don't know if I really do.
Yeah, I don't know.
I really
don't know if you do either. It's like, well, duh, really?
Yeah. Hey, Andrew, so point of sale went out yesterday. What do you have in that?
Yeah, so I've been saying for a while now that I thought the slow vaccine rollout was actually a net neutral for trucking. So it keeps a lid on American spending from outside of the home, which could be further goods, but likely more service spending. But it also keeps Americans stuck at home buying goods. But now we have seen this week and over the past few weeks that the vaccine disbursement is really gaining momentum. So yesterday I questioned whether or not a faster than anticipated vaccine rollout may be negative for trucking. So some analysts, including Amit Mehrotra, one of the most well-known and respected analysts in this industry, he works for Deutsche Bank, he believes that there's further pent-up demand for goods that will be released when a vaccine is widespread. But I'm highly skeptical of this claim because consumers pulled forward a lot of their goods demand over 2020. They replaced a lot of their lack of service-based spending with goods. So if vaccines are now promising the return to normalcy, we must remember what normal looks like. People are very anxious to do all the things that COVID has prevented them from doing over the past year. Recent survey data from Jefferies indicates that 71% of respondents expect to travel as much in 2021 as they did in 2019. And 51% say regardless of vaccine availability, they plan to take at least one international trip this year. So in addition to that, we can also glean a few insights from the recent Bank of America consumer spending data that points to Americans gearing up for a return to normalcy. So yes, Americans bought far fewer clothes in 2020 as they do normally because we just had nowhere to go. So there is a lot of pent-up demand for apparel, but the apparel segment has been one of the outsized beneficiaries of this most recent stimulus check in January. So I see Americans have started to buy clothes again, and they wouldn't be buying clothes unless they expected to be using them sometime in the near future. So vaccines are poised to offer a return to normalcy, but I do believe a return to normalcy means a leg down in the consumer freight and consumer freight demand. And then lastly, I do believe that the media coverage of the virus is about to change pretty rapidly towards a more positive narrative. The last few weeks of the pandemic have been the deadliest of the past year, but now vaccines are really ramping up, the distribution is ramping up, and you're seeing a material impact to both hospitalizations and the transmission of the virus. So I think a faster than anticipated distribution vaccine could be a double whammy for freight. So the return to normalcy means a return to more services spending and away from goods, which is a negative for retail and trucking. But I also think that the reversion back to services may happen well before the services are even available to Americans because Americans begin preparing for the eventual reopening of the world. In other words, Americans are planning for that second half 2021 vacation. As I said, 70% are expecting to travel as much this year as they did in 2019. People that are expecting to travel in the second half, they're going to stop spending on goods and start saving and planning for that trip in the months leading up. So I believe that there could be a little bit of a double whammy here happening for freight, a return to services away from goods, and a preparation for that return well before the services are even available.
So you're more optimistic, Andrew? Is that what you're saying about the pandemic and going forward from here?
I'm certainly very optimistic about the vaccine rollout that I've seen over the past 2 weeks. We vaccinated more than 2 million people in one day last week. We're seeing really strong results, and you're seeing hospitalizations and transmission of the virus come down significantly. I saw in Tennessee, for example, hospitalizations are down 65% from the peak in the first week of January. That is remarkable news. They still remain very high. We have a long way to go to get through this, but the vaccines are having a material impact, and they're getting faster and better at distributing it every day that we keep going through this.
Yeah, it's definitely good news and encouraging news. It'll be interesting to see how the freight mix changes. As you pointed out, talking about the different predictions that are going on, people are going to travel, therefore they're going to buy more things. I mean, goods are definitely going to be changing, and there'll be more purchases, et cetera, from different angles, if you will. Right? Talking to some of my friends that are still in the maritime in the islands. A lot of the money from the hurricane relief is finally starting to hit, and the vaccine's starting to hit. There's a lot of construction material flowing into the islands for revamping all of the different resorts, et cetera, getting ready for the U.S. and Europe to start coming back to the Caribbean in the near future. So, yeah, good news all the way around.
Good news. Thank you very much, Andrew. If you're not a subscriber to your newsletter, where do you go to subscribe real quick?
Yeah, you can go to FreightWaves.com/POS to sign up for point of sale. You get retail and consumer and freight news twice weekly on Mondays and Thursdays.
All right, so we have Andrew Bounds here, says he's talking to Nick Austin about 5 to 6 inches of mix of snow and ice here in Baltimore. And so it's certainly, Puxaconnie is certainly has its shadow out in Baltimore right now.
Yeah, perhaps if Punxsutawney Phil wasn't in the middle of a nor'easter, he might have had a different outlook today.
Maybe so. Maybe so.
Maybe that influenced him. I don't know.
It probably would. Hi to Rhonda, Kurt Mineo, Duke Zivic, all watching here on LinkedIn. So, Nick, what do we have for the weather right now?
Well, guys, luckily, a lot of the tractor-trailer restrictions and bans up in the Northeast with that nor'easter have been lifted in New York State. Also in Pennsylvania, or rather in Connecticut, but Pennsylvania and New Jersey, there's still some restrictions for some truck drivers up there. It just all depends whether it's empty vans. And of course, there are exceptions for those who are transporting medical supplies for COVID relief and things like that. So overall, things on the I-95 corridor getting a little bit better, but as we take a look at the Sonar critical events map, there is still a good amount of snow falling across the Northeast and the Mid-Atlantic. And it's just, this is a slow mover, guys. This has not been one of these quick hitting nor'easters. So it's gonna linger through today, even in some parts of the Northeast for tomorrow. But the heaviest snow is not really gonna be in a lot of the major freight markets or the big cities for the next couple of days. That's the good news. It's gonna be mainly northern New York, up across Maine, so those interior portions of the Northeast in New England. But some places like Baltimore and DC to Philly up towards Boston will see snow, or at times maybe some freezing rain or a rain-snow mix. It's still going to be messy along I-95, 81, a lot of the other major interstates up across that way. So once this storm is finally out of the way, there'll be some more snow coming to parts of the Northeast on Friday. But it's not going to be nearly as bad as this. It's mostly going to be rain. It's going to be much warmer later in the week with the storm that's going to follow this one. But New York City, Philadelphia, I've seen snow reports of 12 to 15 inches, which is the biggest snowfall of any storm so far this season. This was definitely the big one for the Northeast region. And some interior parts of the Northeast have seen 2 to 3 feet. So this has certainly been a pretty significant storm up for this area, especially because it was the first major one of the season. Usually when they get big snows like this, it's earlier in the season. And so when it kind of happens a little later in the season, and maybe people let the guards down because they think, well, maybe we're just not going to get any big snow, and then all of a sudden it hits them. And so, but I think a lot of the state DOTs were certainly ready for this. It just took a while yesterday for a lot of the DOTs, the plow truck drivers out there, to just get the highways and the interstates clear because the snowfall rates were so fast, 1 to 2, even 3 inches an hour, so it was just hard to catch up. But today it's been getting a little bit better, at least along I-95. So this is gonna linger for another day or two. I'll be talking later in the show about some snowstorms hitting other parts of the country this week over the next few days. And also, there's a new article that I'll be talking about that's up on FreightWaves.com. We're doing it kind of countdown style this week. 5 separate articles counting down the top 5 most dangerous interstates for truckers. It's mainly based on accident statistics in rain and snow. So we'll be talking about that a little bit more later on in the program.
Thank you for that update, Nick, and we'll catch you at the end of the show here. Kelly Mansfield is responding back to Nick, saying chilly and 30 degrees here in Michigan. And Rhonda says it's in the 70s in Arizona.
Yeah, we're getting a lot of updates. Rhonda also says her family outside of Philly is getting pounded with snow. Peter Bole is saying that they're getting hammered with snow there in Montreal as well. No groundhog sticking his nose out in Montreal today. And some people talking about, driver wages or the rates staying high and staying where they are. They should be. So a lot of good conversation going on online. If you're not there, check it out.
And that's a good comment about rates being higher, because we're going to talk to Zach Strickland, our Director of Freight Market Intelligence here at FreightWaves, about what's going on in the domestic truckload market. What's happening, Zach?
Yeah, guys, so that northeastern storm did not have a huge impact to overall capacity. Tender rejection rates really didn't move up that much. Now, they did eke up in some of those markets up there, like Elizabeth, New Jersey, but they have already been kind of increasing over the last several weeks anyway. So it's hard to disseminate just how much this storm did, to capacity up there, as it was already in the process of moving slightly higher on the tender rejection indexes up there. We had the Elizabeth, New Jersey market increase from about a 16 to 19% over the past 2 weeks. So it was already increasing. Did they see this storm coming and get out in front of it? I'm not real sure in terms of what those carriers were thinking, but I would anticipate that there was at least some semblance of this activity already. This storm was forecasted well in advance as it was pounding the West Coast out there. Now, overall rejection rates are kind of hovering right now. They're not moving that much. They ticked up slightly over the past few days to about almost 22% again. We've been in this 21.5 to 22% level for the last week and a half or so. But a lot of that rejection increase is actually being fueled by West Coast tightening. The LA market, for instance, the LAO tri jumped up from 15.6 on the 27th to 18.5% yesterday. So that side of the country, which was driving a majority of the tightness in 2020, is starting to pick back up in terms of overall tightening again, and that's really what has fueled a lot of this recent increase. The rest of these larger markets like Atlanta, Chicago, Dallas, all remaining relatively stable at this point.
So Zach, is that an indicator of kind of a wave effect starting to happen? You've got LA, you got 40 ships out there circling the globe, waiting to get into Port of LA and Long Beach. You've got more coming. You look at our ocean shipments, the booking 7 days out, and it's still multiples over last year this time as far as elevated. So the future past the Lunar New Year looks like things are going to be backed up. Now you're starting to see LA starting to tighten. Are they starting to empty those warehouses moving across? Is that going to affect the short haul and tweener later on?
It doesn't necessarily look that way right now because we're looking at our volumes staying relatively flat. Now, accepted volumes are going up slightly, but this appears to be more of a supply side issue at this point in time because volumes are down month over month. And we're not seeing a significant change in that just yet. And again, we're seeing some of these international rail volumes start to come down because we had that big COVID outbreak on the port. So they're not able to really offload as much freight as they were back in the end of last year. So those volumes have not necessarily translated all the way into domestic truckload just yet. But it is interesting to see that we have seen a pretty significant tightening occur on the West Coast, which is again out of season, which we thought we were starting to move back into more of a seasonal pattern for the freight market where we see some of these traditional patterns emerge. We saw volumes kind of dip in the third week of January before recovering slightly again at the end of the month. This is really out of cycle for the Los Angeles market to see this tightening again and again overall tender rejections in general. So I think what we've done is we've kind of found a floor for the time being with freight market activity. In terms of volumes not really being that volatile at the moment, which is typical for this time of year, not to see that volatility, but they are still an extremely elevated level over last year, and I think that is going to persist for the next couple of months at least.
So, Zach, you had your charter of the week this week talking about flatbed. What's happening in the flatbed market right now?
Yeah, so flatbed has been kind of this sleeper mode of transportation for the truckload market over the last year or so. Since the COVID outbreak, tender rejections for flatbed not moving that much. They dipped and then they recovered a little bit, and kind of the water level of the market itself pulled up the tender rejections and spot rates for flatbed, but they dipped below both van and reefer on the spot market in terms of overall rate elevation, which is very unusual for flatbed. You know this, Kevin, having been that broker. The flatbed market's a lot more volatile. They're used to paying a lot more for that freight, and they have been well below that, but they've stayed relatively consistent here over the past few months as they've recovered slowly and have now surpassed van on the spot market again.
It's good to hear that flatbed has come back. Industrial strength, that's what it really shows you. Thanks for those insights, Zach, and we'll catch you Thursday for another update on the freight market. But yeah, no, it's always good news to have flatbed strong, the industrials coming back, the economy moving, which is a great sign, especially after the last few months of flatbed,
Yeah, just
of volumes and capacity's not really been great.
Yeah, well, I mean, starting to see an indication that we're starting to get supported by industrials a little bit more and more is always good to hear. So, and speaking of economics.
Speaking of economics, we have our lead economist right here, Anthony Smith, to talk maybe about some industrials.
That's right, Kevin, Michael. So it's been a while, so I have quite a bit to cover, and just kind of picking up right where Zach left off, talking about the industrial segment, mainly manufacturing. When we look at the Institute for Supply Management, PMI, the Purchasing Managers Index, we see that it moved down for the main measure, the PMI, down to around 58.7, I think it is. And so it's a slight move down, but it's still above that 50 threshold growth rate. So it is expanding overall. The thing is that, of course, it's broken down into different components. So we have new orders, which retracted a little bit, employment, which came down, and the other part that remained high that we're going to have to keep our eyes on is those prices. When we look at the report, respondents are talking about production levels are still high, but one of the biggest areas of concern is going to be labor. Labor is very, very tight. They're having capacity issues. And so even though we're seeing some momentum build up for manufacturing, labor is going to be an issue going forward in the coming quarters, and those prices for commodities. Commodity shortages are going to be a definite impact to the overall sector.
So Nico Brown says, thankfully he got in time to catch your segment on the economy, Anthony. And so what else is happening in kind of data releases that you're really watching right now?
Definitely. So in terms of, we were just talking about industrial production and manufacturing. On that note, we also have construction spending, which those building product materials also go on flatbed trailer types. And so when we look at construction spending, we see that there was, I think, a historic level of construction activity throughout this year. And so we saw that, of course, with construction spending on a year-over-year basis, over 4% growth rate. So we're seeing, of course, the year close out for December very strong. A lot of that is going to be driven by residential construction spending. Of course, some slight contraction for hospitality and things like that, hotels. Going to see some weakness for office space, of course. But when we're moving forward, there's going to be strength, I think, for for construction, for residential, and maybe some opportunities for housing. So not housing, but for highway and street construction moving into the new year.
Yeah, I would think hopefully if infrastructure bills and so on keep that moving forward, infrastructure spending for construction will be great. But yeah, I would think that it would be fairly weak for office buildings and that type of construction, right? But you said that there was a kind of a drop or a weakness in construction in the hospitality segment. I would imagine that would start to change with the vaccine and the everybody's kind of bullish on travel starting to happen again.
Definitely, I think as we get into especially the second half, I think there's a lot of optimism by the summer of 2021 kind of being a renaissance or resurgence, I should say, of activity and getting back out there, especially as vaccine rollouts start to really kind of make an impact. So hopefully we can see that mid-2021 and especially that latter half of the year, a lot more hospitality, a lot more travel, a lot more leisure, because of course these are things that move the economy. I know just from anecdotal evidence or just stories, hearing people really kind of getting tired of being pent up for so long. You got millennials and Gen Zers that want to get out and go back to those music festivals and have a good time, spend all that money, of course, on those goods and services. But of course, when we're looking at the overall economy, it's just an ever-changing puzzle with changing pieces. And it's funny to just see how consumers adjust and how businesses adjust. And I'm sure there's going to be a lot of adjustments made even throughout this quarter as we see what kind of stimulus packages are going to be put in place in the coming months.
Thank you very much for that, Anthony. We'll talk Thursday about new home and existing home sales, some of your favorite topics, and we'll get a pulse on that. But I think that hasn't cooled off at all. But thank you again. So yeah, so economy is doing well, industrials are doing well, flatbed's doing well, ocean shipping Imports are doing well as well.
Yeah, the imports are doing well. Exports not so. not
True. The exports, there's some issues there, and we have our next guest coming up, Lorianne LaRocco, senior booking guest or booking agent at CNBC, on with us right now to talk about what she's finding out in the market. Oh, well, she'll be on very shortly. So
she will be on very shortly. You know, there's people talking about what Anthony was talking about here about, you know, the unemployment and the labor issues, et cetera. And is this in your opinion, or should I ask Anthony really, is there still a difficult, you know, we experienced this at the end of the 1990s, where, you know, we had a difficult time getting people back into the labor force after having basically, you know, extended unemployment benefits, et cetera. And with the new administration talking about the stimulus package, and now they're trying to push forward $1,400 checks to make it up to the $2,000. Which now the Democrats are now talking about this new way that they can do that, but it could take a month to push it forward without any Republican support, et cetera. Is this keeping people out of the labor market?
I think it probably is. I think there's going to be a bit of a transition back in. I think you have a very good point there.
Yeah.
Yeah.
I think it would be difficult. We'll see how that transition, you know, in the service industry especially, right? I mean, trying to get people back into the service industry. We got these vaccines and they're doing quite well and they're moving forward, but it's a tendency of people to overdo it at times, right? Even in the comment section we see in here where people are saying, you know, they've seen around their town noticeably less masks, which is a little concerning to me. I mean, we've got the vaccine and people are taking the masks seriously, et cetera, and we're going in the right place, but it doesn't mean that it's over with and we should just go out and celebrate, because the numbers are going in the right direction. That happened last fall, and we said, hey, let's all go back to school, and the numbers went up. We went, what happened? How did this occur? Well, yeah, duh. But
so, let's flash forward to our next guest, Spencer Tenney from the Tenney Group, the president and CEO, and talk a little bit M&A activity. We've already had a very busy January, so let's check in with Spencer on the pulse of that market.
Good afternoon.
Good afternoon, Spencer. How are you?
I'm doing well. Good to be with you, gentlemen.
Good to have
Welcome,
you on,
Spencer.
As well. Can you give us a little bit about your background and the Tenney Group?
You bet. We are an industry-specialized merger and acquisition firm. I've been dedicated to transportation logistics since 1973. I'm a third-generation guy in the transportation industry. My grandfather was actually a cab driver back in Dallas, Texas, back in the 50s, and so just a rich history there. And over the time of being in this space, developed this unique expertise to help business owners as they transition their companies to other buyers or family members, and it's just a great privilege to help them do that.
That's fantastic. So Spencer, what are your thoughts on 2021 and M&A activity? What are your expectations for 2021?
Well, you know, as we discussed with the Truckload Carriers Association recently, we do expect there's going to be quite a bit of an uptick. There was a small bump between 2019 and 2020 in terms of volume of deals. We expect that's going to be pretty significant, probably about 20%, maybe more, from overall activity. Now, some of that will be just catching up from what should have closed in 2020, and that has pushed in. We had several deals that were involved that were on the way to their closing table, and for whatever reason, maybe their bank had a moratorium on acquisition financing as they were trying to get their bearings through COVID. So I think that you'll see a tremendous spike, but some of that's just more of a normalization of what was supposed to happen last year, but bumped into this year. But even that being said, there's a tremendous rush on quality companies that present top leadership, that provide some type of niche expertise, because everyone's looking for that competitive edge, and acquisitions seems to be one of the major ways to try to go about making that happen.
Yeah, is there just a major trend? I mean, obviously, I think some weaknesses within specific industries and specific companies were exposed, so to speak, through the pandemic, right? And so I would think that it appears to me, and maybe you can validate this or shoot it down, is that there's this need to fill those gaps or put the finger in those dikes. And the easiest way to do that is to find those companies that fit well with yours that can immediately bring that from outside, and rather than growing it organically, which tends to take more time. Would you say that's the case or no?
Yeah, I think you're pretty spot on. I think that one of the unusual developments for us is that we had a tremendous amount of buyers that have been very active, that came to us and said, "Hey, we want to be active in through acquisitions, but we don't want to be in the same vertical anymore. We've got to diversify." So what you're going to see a big trend in 2021 is there's going to be significant growth, but you'll see expansion into new verticals because of all of the new risk and the ultra sensitivity about being overexposed in any one vertical. And so as part of that, people aren't going to try to experiment on their own dime. They're going to go attract and target the best companies that have the best leadership teams to go next level, because quite frankly, to pay that 10% premium on the valuation today is a whole lot less expensive than experimenting as you go with an unproven team. So I think that's what you'll see.
Yeah, so freight volumes and rates have been on a roller coaster ride these past 12 months, from the lowest of the lows to the highest of the highs. And that's certainly going to affect the valuation of the market and of both sentiment for buyers and sellers. What does valuations look like right now for trucking companies?
I mean, I think it's going to be, we joke about this in terms of EBITDA calculations having that extra C as far as the coronavirus add back or normalization. Buyers are pretty savvy. I think the best ones were able to appreciate that, hey, we had some non-reoccurring expenses that we have to kind of, or disruption that we need to fairly account for. And I think we're probably going to see some healthy rates in 2021. And I think that savvy buyers understand the cyclical aspect of that. And so I think that buyers and sellers, when they get around the table and they're trying to get a deal done, they come there with reasonable heads about how we're going to get this done, and don't over acknowledge what's something that's kind of cyclical, but they don't want to necessarily not acknowledge it either. So it's usually some kind of they're going to acknowledge it, but not necessarily disproportionately weighted as part of evaluation. If that makes sense.
It does. It makes very good sense. So it's been an active January. At least TFI has been active in January with UPS Freight and also Fleetway that was announced yesterday in the LTL market. Where do you see the LTL markets, and kind of if you have any opinions or not, any analysis on TFI's deals? Would love to hear your thoughts.
No, I think that what you're seeing is that. I think that what you'll see is for a lot of larger companies, they're going to make strategic decisions about where they're going to make money and where they're not. And you're going to see companies divesting of certain divisions that are not winners, just because it's too unforgiving to have that much resource and that much capital committed to things that are not producing results. So I think that's where you're going to see some deals being made around that. And that's not just isolated to LTL. I think that's just across the board. Especially with large companies, I think that they have very specific strengths, and then sometimes they get involved in something and they think those strengths are going to translate over to another vertical, and sometimes it just doesn't happen. So the sooner that they can recognize that, like, hey, this either has legs or it doesn't, then I think that's what's going to move a lot of deals, and especially in this environment, we have low interest rates, high access to capital, just a good environment. I think you'll see a lot of that in the first half of 2021.
So I guess what are your parting thoughts on 2021 and anything else you'd like to add?
I think the things that I would be watching out for, the proposed tax plan, that's a significant thing, and that's for both parties because, of course, it's not law. We don't know if it's going to be law. I think if Biden administration wants to make it law, that there's a path to do it, and to do it soon if he wants to do it. But there's all kinds of complexities around that. But the main thing that I would point out is the increase or the proposed increase to the capital gains tax, because that's very material, both in terms of what people actually net from a business sale, but also how companies are valued. So right now, what we're looking at is trying to convert our current 23.8% to ordinary income for everything over $1 million. So what that means for business owners who are considering exiting in the next 5 years is that every portion of the purchase price, every $10 million there will be an additional $1.9 million in additional tax. So for a $50 million transaction, that's literally around $10 million in new taxes as part of this proposal. So not only does that affect your net proceeds, but I mean, you think about private equity, they're looking at deals, they make their whole valuation based on the available return on the after-tax environment in the future. So like it's impossible for them to not consider that as they make values. And of course, they're driving most of the major deals right now. So that's going to have significant influence just in terms of deal flow, both for buyers and sellers, based on how fast they're going to move, because you're going to want to make something happen sooner than later.
Yeah, certainly new taxes will affect those valuations, which will affect the market. Spencer, thanks for joining us today. How does our audience reach out and learn more about the Tenney Group?
The best way would just be go to our website, which is thetenneygroup.com, or you can reach us at dlooney@thetenneygroup.com.
Thank you very much for your time today. Always a
Pleasure
pleasure.
to be with you guys. Have a good one.
You too. You too. So always interesting, new year, new M&A deals. So it's always time to come up. But,
Yeah, absolutely.
we have Lori Ann on right now.
Awesome.
Lori Ann LaRocco, the senior guest editor and the author of Trade War. I can't talk today. The author of Trade Wars, Containers Don't Lie. How are you doing today, Lori Ann? Lori Ann, are you?
I'm doing well. How you doing, guys?
Good, good. Glad to hear from you. So you have your latest monthly article on American Shipper about U.S. exports, and you found out quite a bit of information. Can you dig down deeper for us?
Sure thing. Well, for the last 2 months, actually now 3, I've been looking at the ratio, if you will, of how many empty containers have been going back versus the loaded containers of ag exports. And based on the containers, and as you know, I always say containers don't lie. Based on the volume, you've had a significant increase in the amount of empties going back from the ports of Los Angeles, Long Beach, and New York and New Jersey, instead of having the carriers put on the ag exports. And so what we're looking at here is a denial of trade. And I was able to quantify it and actually put a dollar amount. And you're looking at, just from the 2 months alone, well over $600 million in lost trade. And from the months of July through November, $1.1 billion. Now, some of the carriers have said, and you've probably heard the argument, they're like, well, we have record imports coming in. Therefore, we have to have more empties going back. But that's not the case. When you look at the amount of empties that have gone on historically on vessels, that number has not changed. What has changed? Well, it's pumped up. And so when I was actually talking to some carrier individuals earlier last week, I said, well, the reason why you're putting more empties on is that empties are quicker to unload. They don't have to be processed, and they're not dirty. Whereas with the ag exports, we all know they are a cheaper commodity. They are dirty, and it takes a lot longer to unload. So it takes more to get into the system. And based on that, and also the fact that they want to get back and get on the nice high rates from China to the United States, that's the reason why we are seeing more empties going into the system versus loaded ag exports.
That makes a lot of sense. Now, and so what can be done about that? I heard, the complaints and threats, but is there really anything that can be done to change that with any type of real action or teeth?
Oh, absolutely. The Federal Maritime Commission, as you know, back in November, issued an investigation into this matter, amongst others. And they are quickly reviewing. I gave them the data from my analysis, and they said it falls right in line with the complaints that they are receiving from the ag exporters. So what they can do is they're reviewing to see if this conscious act, and that's what it is, it's a conscious act in denying of trade, does that fall in violation of the Shipping Act? And so with the Shipping Act, the Federal Maritime Commission is actively looking right now to see if these carriers will have to reciprocate in some way by paying penalties, as well as looking to being not forced, but they would have to put exports on.
So is this something that they're actively investigating right now, Lorian?
Absolutely. The Federal Maritime Commission is actively looking at it. I spoke with the FMC earlier today. I'm actually writing a follow-up piece to my article that I wrote last week because the Port of Los Angeles recently sent a letter to the FMC imploring them to take some action on this because in the end, this is going to impact U.S. GDP. When you look at the amount of hands that touch a U.S. export, from the farmer to the truck to the warehouse, there are a lot of jobs that are associated with U.S. trade. And if we are missing out in billions of dollars of trade, that puts our economy at an economic disadvantage. And that's what the FMC is looking at right now.
Absolutely. So, Lori, kind of on the same subject, but a little bit off, is you wrote a commentary about breaking the backbone of trade, where you're talking about China limiting the vessels moving from north to south ports, and how that affects capacity here in the United States, and also the ag trade industry with the limitation of the movement of feeder vessels. Can you talk to that a little bit and kind of that I found that very, very interesting.
Sure thing. So pretty much when it comes to the various trade routes, one of the we always hear about the Trans-Pacific route, right? From China to the US, US to China. What we don't hear about are the trade routes within the Asia route, right? With North and South. Well, because of coronavirus and because of Lunar New Year, China stopped or nearly stopped the flow of trade from that crucial corridor. And the ripple effects of not having these feeder vessels, which enables the commodity, right, or product to be shifted from one ship to another, because these are smaller vessels, so they can get into the tinier ports, whereas the larger vessels that come here to the United States, they can't get into those smaller ports. That's why you need those feeder vessels. Because of the denial of that trade, you are going to be looking at a backlog and of PPE coming into the United States, consumer products, because it's that ripple effect. Because if you can't get the product out of the tinier ports onto the bigger vessels, that means it's not going to get on the big ships to come here in a timely fashion. So this is showing you, it's a forward-looking indicator, if you will, on how trade is going to be slowed down. And what happens is it creates a fake surge, if you will, of containers coming in because it's backlogged. It's like when you have a stopper, what happens? It builds up. And because of that buildup, you have that ripple effect going up the West Coast where the ships are late coming from LA to, say, Oakland to Tacoma. What happens there? Ships need to get out on a timely or a faster basis. What are they going to do? Put on empties. They're not going to put on the U.S. ag exports. So it all goes hand in hand.
So we should expect that for the time being and throughout most of 2021 is these waves of stops and starts, right? We get a big rush into the West Coast and then, a little bit of downward trend and then another wave coming in. What's happening to U.S. exports right now? Are the inventories building up on the West Coast, or are they still kind of in the Midwest or where they're grown?
Well, it depends. Some of them are at the port, but a lot of them are in their warehouses. I spoke with one individual for American Shipper, one trucking company. More than 60% of his lot contains containers that have U.S. ag exports in there. So they're stopped, and the ripple effects is unbelievable. Union Pacific, who I spoke with, told me that they had to embargo. They had to take off containers off of their rail because their client who had that container, they couldn't get their container out of the port of Los Angeles. So this literally is ripple affecting across the nation. And I've had some folks tell me that they fear almost like a cement, if you will, forming amongst the containers because they can't move.
Unbelievable. I would imagine that there's some a bit of backlog at the larger ports over in Asia as well. If you don't have these feeder vessels to get into the shallow ports, the destination of a lot of that ag that's going over there isn't being met. You can't get to it, so it's just sitting in the Chinese ports as well, right? The port of entries into Asia, right?
Exactly. So it's an absolute mess in terms of containers with nowhere to go.
That is. We'll be looking out for your next article on this, because I know you're going to follow up with it and keep tabs on this situation and give us all the latest updates. How does our audience reach out and contact you, Lori-Ann?
You can follow me on LinkedIn. I break a lot of news there, as well as on my Twitter account. So at Lori-Ann LaRocco.
Well, thank you very much for your time. Always a pleasure having you, and I look forward to having you on again, Lori-Ann.
Thanks for having me, guys.
Thank you.
Thanks, Lori-Ann.
So yeah, it's a chaotic.
Always awesome when she's on, but lately it's always news that kind of infuriates you a little bit.
I know, right? It's just a wild and crazy market in the maritime world.
It is, and when we were looking at the subject here, I thought it was really, really interesting to show and have her talk about those feeder vessels. I was familiar with that. It was a large part of what we did back in my maritime days was feeder vessels, and just how that can screw up the trade as well. When you've already got this issue, and you've got some people asking questions in here that I would, are they like Peter Bolle to my earlier comment on ship shortages? Mm-hmm. Could it be as simple as an empty ship will return faster than a fully loaded one? And the answer is yes, in many ways. Yeah. Not just the transit time, cheaper fuel moving across there, right? But it's the loading, as Lori-Ann put out. They're cleaner, so you can use them as soon as they get to the other end, right? It's easier to import because there's nothing in there to go through. You don't have to go through customs on the exit and the entry. So yes, it speeds up everything. Yeah, it is.
I was talking to a transportation manager or a logistics manager at a major automotive components manufacturer yesterday, and he reminded me, we always talk about the West Coast, Asia coming into the West Coast, that trans-European and in Latin America shipments and ocean voyages are all having the same issues. Yeah. Maybe not quite as amplified as the West Coast, but they're wherever you go, you're having capacity constraints right there. So let's check in again with Nick Austin and the weather.
Hey guys, we're still looking at that nor'easter from the mid-Atlantic all the way up into New England. And actually Peter, who wrote in, he's up in Montreal, and he said he's getting pounded with snow and wind from this storm. So it's crossing over borders internationally. But speaking of Canada, this storm is going to affect other parts of Canada as well as the United States. Travel is going to be really bad over the next few days on the Trans-Canada Highway because the storm will gradually move towards Prince Edward Island, Nova Scotia, places like that. So it's not just the United States. It's going to affect truckers and our neighbors to the north too. So that storm should gradually fade out later in the week up in Canada though. Other parts of the U.S. that'll get snow though, it's going to pick up in parts of the Mountain West, the Cascades, the Sierra Nevada, the Rockies are going to get some areas of heavy snow over the next couple of days. And then by Thursday, that's going to hit some parts of the Plains and the Great Lakes. Nothing terribly major that most drivers probably couldn't handle, but just be aware there will be some trouble spots going over some of those mountain passes. So, but speaking of rain and snow and truckers trying to get through that kind of weather, if you go to our website, FreightWaves.com, we're doing this countdown style, the top 5 most dangerous interstates for truckers. It's based on a couple of different government sets of accident statistics based on what happens in the weather. And number 5, which posted yesterday, is I-77. We're talking about entire interstate lengths, not just certain sections. And then I-20 ranks number 4. So I-77, which maybe not a lot of people other than truckers are aware of, it runs from the southeast all the way to the Great Lakes, about 600 miles or so. I-20 is much bigger, from Texas all the way across the southeast. So go check those articles out on the website. You can also find links for them on my Twitter handle, which is @FreightWeather, and of course at all the FreightWaves social media accounts as well.
Thank you very much, Nick. A lot of dangerous interstates out there.
It's winter.
You could write forever just about dangerous interstates.
Yeah, job security for Nick. Yeah, it's winter, so be safe. And it's going to going to be coming at you, isn't it?
Yeah. Yeah, here's an interesting, Peter Bowley talking to Steve Krenick on LinkedIn here on the comments. Force majeure clauses are very specific as to what dictates the situation, and if not specifically called out, then it has no effect. I think Steve Krenick was asking about how force majeure
come into play
in,
with the container and the exports. Yeah. And that's what it is. If it's not spelled out in there.
True. So sometimes you read the LinkedIn comments, I glance over to you and come back and it's moved, and I miss out on the conversation.
A little bit. You see the answers and they look interesting. You got to dig back and find what the question was, but keep them coming. It's been really good activity. And speaking of that, did you catch What the Truck yesterday?
I caught some of it. I didn't. Did
you see that? Like 67-meter, 200-foot turbine blade going through. Where was it going through? Luxembourg or Liechtenstein? Or
so I saw the photos, but I didn't see the truck. So I was, I've seen a lot of wind turbines. I'm from Oklahoma. I've seen a lot of wind turbines go down the road. I've never seen anything like that. Was it sticking straight up?
Well, he had the ability. So it was going, and it was sticking forward. It wasn't hanging off the back.
Yeah.
Right. So this thing's like 200 feet out in front of the truck, and he could move it up and down and set to. Yeah, going through little towns and around light.
Well, I guess so. Yeah.
Yeah. So I mean, so he gets there and he delivers it, and then it's only 6 more to go.
Right. True.
Piece of cake. But it was a great show. We talked to them and Steve Kane, the president of Rolling Strong, about talking to people about driver health and what you can do to stay healthy in your cab, and the Highway to Health competition there. That's going on, and Jane Jazraoui, CEO of Carrier's Edge, about training drivers, etc. It was really good. Trey Griggs was on. He did another Play It Forward, talking about what's going on there. And Peter Bowley, who's been active in the comments, talking about air cargo.
Nice.
Was a really good one. So
we have Kelly Mansfield. She was watching yesterday. She says, especially backing into the village. She said it was an awesome video.
Oh, it was unbelievable. Guy's got some talent.
And then at 2 p.m. yesterday, Put That Coffee Down, Chris Jolly and I went through carrier sales and why it's the lifeblood of freight brokerage, and how to identify not only safety and vetting, but how to qualify and find quality carriers.
Yeah.
And we kind of went in and really defined quality carriers by showing the negatives, right? The red flags of what to stay away from, to kind of demonstrate good carriers from bad carriers when you're a freight broker, and negotiating and building relationships over the phone.
Interesting. So, hey, tomorrow on What the Truck, we've got Pierre Laguerre, he's been on before. He's awesome from Fleeting. We got Marcus Cooksey, CEO at Duke.ai, and he's going to give us a comeback story. So you could be interested to hear that. It's going to be really good to get a great comeback story for us. Britton Wesson from JBH got to Play It Forward. We got another great Play It Forward, and you're going to love this. Hope Zavara. You know who Hope is?
I don't.
She is a yoga and lifestyle expert and motivational speaker, and she's CEO of Mother Trucker Yoga.
Oh, okay.
So, she's going to be on tomorrow, too. So, great What you got coming up?
That is awesome. And I think 2 o'clock today, Great Quarter Guys with Seth Holm, and 3 p.m., I'm sorry. 3 p.m. today, Eastern Time, Seth Holm and Andrew Cox on Great Quarter Guys. They're going to talk about finance and the intersection of freight with that. And then we have the Global Supply Chain Summit coming up. You can check that out, live.freightwaves.com.
Peace and love.